Hello friends, hope you're having a great weekend. Today we are going to do a pre-market analysis on gold. We are going to discuss the chart of gold in a very simple manner today. In a very simple manner. As you can see, this is the weekly time frame chart for gold. So, what can you see in the weekly time frame chart of the gold? Market is taking multiple support from this trend line liquidity 1, 2, 3, 4, 5. 5 times it has tapped on the trend line liquidity. Trend line liquidity is a place where retailers would like to enter. At the same time, the green zone in between 4132 and 3996 was a weekly time frame order block. Currently, we got a sweep from the weekly time frame order block or from the hidden point of interest, which is over here. It has given us one support, the second support and the third support. Now, by looking at the support taken at this area, we can consider the market is bullish. But at the same time, you need to understand, for the last 6 or 7 months, market has been entirely bearish. So, in order to break all the liquidity zones, the trend line liquidity plus all the selling liquidity zones at this area, market needs a higher order or markets need higher buy side liquidity. So, if you ask me if market has taken enough liquidity from this area, we cannot say. Because if it have taken a great liquidity, we could have expected a huge move like this, like a huge candle like this. But we haven't received any kind of candle in the weekly time frame. This is a weekly time frame candle. This is a weekly time frame candle. You can see the big upside move. But even after the sweep, we haven't received any movement still now. Even though market is in the bullish order block plus the retail liquidity zone, still there are a lot of rejections in the daily time frame. Look at this. After taking the sweep from the weekly order block zone of 3996, market is trying to go up again and again and again. Again it is getting rejected at this selling order block of gold in between 4134 to 4221. Last day or last week in our community, we mentioned that market might come down up to 4010. Market came down up to 4020 or 22. After that, it is taking a slight pullback. We can't say if this pullback leads to bullish or from here it is going to be bearish. But let me show you what I found in the daily time frame. The daily time frame, as it is in a selling order block and also in a buying order block, which one would you trust? It is in a pure indecision zone where the sellers or buyers are not able to take a decision either to go for a buy or to go for a sell. See, this is a sell zone, this is a buy zone. What to do? Now, if you look at the daily time frame, we can see there is a trend line liquidity which is being formed over here. It's a support. At the same time, this is a rejection zone, I would say. So, if you ask me, if we go to the 12 hours time frame also, we can see that there is a flag pattern which is visible over here. From here, you can see that it's a flag pattern. Basically, this is a bearish flag pattern. But it doesn't mean that market should directly go down. There are two chances at this area. As there is a flag pattern with the retail liquidity, the market is in a bullish zone plus it is entering a bearish zone also. So what can happen? Two chances. Either from this area, market can break the range of 4221. If it is breaking the range of 4221, it can come down, take support from the range of 4221 and it can go further to the upside. This is one chance. At the same time, as there is a rejection zone in between 4134 to 4221, maybe it can go, let's go back to the 1 day time frame, maybe it can go to the order block zone in between 4314 and 4221, plus there is a rejection trend line over here. It can go up, tap on those areas and maybe fall down further. I still believe that market can come down more further to collect the orders which is left in between the range of 3,929 to 3,870. There is a huge orders which is pending at this area. If it is coming to this area and market is giving us a great movement, then definitely we can go for a buy. So I'm trying to explain you the chances again in a very simple sentences and very simple terminologies. I don't want to confuse you guys. From here, if it breaks, market turns bullish. If it is taking a rejection from this zone or a trend line liquidity sweep or anything from this area, it can come down. 4,000 or 3,900 range is a great buy zone. If it is coming here, forget everything, simply buy, because from here maybe the chances are this one. This is gonna happen. But who can be sure in this situation? No one can be sure about anything in this situation. Look at the news, what is happening. They have declared the ceasefire and some peace treaty and all those things and all. They have restarted the war. This is a live update, June 12th. US-Iran war updates after US strikes Iran, missile alerts sounded in UAE, Qatar and Bahrain. Huge political tensions, economic tensions. And look at this. US-Iran, Tehran heads Gulf states, says Strait of Hormuz closed. It's another negative news. Negative news or positive news, we don't know. Because it can affect gold in both the ways. Either the institution will take this as a chance for a higher buying or a higher selling to the downside. Now, if you look at more news, see, US launches fresh strikes as Iran closes Strait of Hormuz. This is being continued on a daily basis. We can't say what is going to happen. In the Monday market opening, we should expect a huge fall or a huge pump. Should be ready for anything. For all the new traders out there, there are some instances in your life and in the market also where you should stay silent. You can avoid some negativities which are going to happen, both in the market and in your life. If you stay silent in the indecision state of the market, you can save your capital. You can trade when the market gives you a great opportunity, you can earn money. At the same time in your life, if you keep quiet when you have a problem, half of your problem is solved. So this is what I have to tell you right now for the new students and the new traders. Simply keep quiet, because it is not the time to trade. It is time to watch the market where it is going to come to the next buying order block, or if it is going to break the selling order block and turn bullish. If it is turning bullish, we can go for a buy. If it is turning bearish, we can go for a sell, or we can start buying from this area. Now, for the existing traders, add more liquidity for your buy trades. Even if the market is coming down, your trades should be safe. That is the one suggestion that I would like to give you. The people who have hedged their position, just imagine why you have hedged your position. Because there was a lot of trades running. You need to understand the situation. You need to wait either for the market to break the rejection zone and turn bullish, so that you can cut off all your negative trades and just focus on the buy trades, or else you can hold your sell positions and close it in the next order block, so that from here when the market goes up, you can protect your capital and remove all the trades which is taken on the top. Now, coming to the news which is happening in the coming week. On July 14th, Tuesday, you have CPI, it's a high impact news. Wednesday, crude oil inventories. Thursday, initial jobless claims, say high impact news. So on Tuesday and Thursday, you need to be careful, as there might be huge volatility. My dear friends, it's time to watch the market and avoid high risk trading. Thank you so much. Always trade by protecting your capital, because only if you have a capital, you can trade and you can earn money. the capital is vanished, you can do nothing. So trade safe. Thank you so much and all the best.